What do multi-million dollar surgeons, other healthcare professionals, successful attorneys, corporate execs, no athletes, tech founders, and other high income earners have in common? Ironically, many of them discover the hidden tax cost of their success at exactly the wrong moment. Not when they're signing a new client, not when they're receiving a promotion, not when they're celebrating a record breaking year. They discover it when a large tax bill arrives. By then, the opportunity to make meaningful changes is often gone. The truth is that most tax outcomes are determined long before tax season arrives. Yet many high income professionals spend 11 months making financial decisions and 1 month thinking about taxes. Think about that. According to industry research, most affluent investors believe taxes will increase in the future, yet only a small percent engage in proactive year round tax planning. In other words, they see the storm coming but never prepare the roof. Today's source document explores a simple but powerful question. What is the true cost of waiting until tax season to think about taxes? Because the answer isn't just measured in dollars, it's measured in missed opportunities, unnecessary stress, cash flow surprises, and wealth that quietly slips away. And that's what we're unpacking today. Hello, I'm Jovi Shari Brown, and welcome to the Sweet Spot Tax Podcast. In each episode, we take a deep dive into a Georgia Peach income tax sweet spot source document written by me. Guided by brief musical transitions, we'll explore 5 key areas: the deep dive, the psychology behind it, the sweet spot shift, actionable takeaways, and the clarity check. Along the way, we'll expand on the source document and explore the ideas, strategy, and questions behind it. Our goal is simple: to take complex topics and break them down into clear, practical ideas that are easy to understand and apply. Whether the topic is tech strategy, business growth, financial clarity, navigating IRS challenges, or decision making, the objective remains the same: to help you think more clearly and move more intentionally. Let's align with your sweet spot and begin today's deep dive. Let's dive into this. Here's a reality that surprises many successful people. The IRS doesn't care when you think about taxes. The tax code is operating every day, whether you're paying attention or not. Every investment decision, every business decision, every compensation decision, every retirement contribution, every charitable gift, every stock sale, every real estate transaction, every one of those decisions carries tax consequences. Consider 3 examples. First, a physician earning approximately $800,000 annually. The reactive version of this story is common. She works hard, earns well, and assumes her CPA will, quote unquote, handle the taxes. At filing time, she learned she owed substantially more than expected. Why? Because she never maximized retirement contributions, never funded her HSA, never evaluated business entity structure, never considered bunching charitable contributions. Her tax bill approaches $280,000. Now compare that with the proactive version. Throughout the year, she strategically maximizes retirement contributions, funds her HSA, reviews entity structure, and times deductions intentionally. Her tax bill drops by approximately $40,000. Same income, different strategy. Second, consider a technology founder who sells appreciated stock. The reactive approach is simple: sell everything, celebrate, pay taxes later. Unfortunately, taxes later arrive with a vengeance. The founder discovers a significant portion of the gain is headed directly to federal taxes and surtaxes. Now compare that with a proactive approach. The founder plans before the sale. A portion of the gains are strategically deferred. Appreciated stock is donated directly to charity. The transaction is structured intentionally. The result? Potential savings exceeding $60,000. Again, same success, different strategy. Finally, consider a corporate executive receiving bonuses and stock compensation. The executive assumes payroll withholding is sufficient. It isn't. By April, a surprise tax bill appears, along with potential underpayment penalties. The proactive executive performs quarterly and mid year reviews. She updates withholding, adjusts estimated payments, documents deductions carefully. The result is a smoother financial experience and significantly fewer surprises. Same money, different strategy. What do all 3 examples have in common? None of the savings occurred in April. The savings occurred months earlier. Tax season simply revealed the results. So, what's the psychology behind it? Here's where things get interesting. The biggest obstacle to tax planning is rarely knowledge, it's psychology. Most high income professionals are intelligent. Many are experts in their fields, yet they still delay planning. Why? Because successful people often develop a dangerous assumption. If there's a problem, I'll figure it out later. That mindset works remarkably well in many careers. It does not work particularly well in tax planning. The tax code rewards preparation, it penalizes procrastination. There's also something called present bias. Human beings naturally focus on today's priorities over future consequences. The bonus arriving today feels real. The tax bill arriving next April feels distant. So the brain prioritizes today's reward and minimizes tomorrow's cost. Another factor is decision fatigue. Busy professionals make hundreds of decisions each week. By the time tax planning enters the conversation, many people simply don't have the mental energy to address it. So they postpone it, then postpone it again. Then suddenly, it's March. And finally, fear enters the picture. Many people avoid tax planning because they're afraid of what they might discover. Ironically, avoidance often creates the very outcome they fear. The stress doesn't disappear, it compounds. That's why proactive planning often creates emotional benefits that extend far beyond money. Uncertainty is often the real psychological source of financial stress, and clarity reduces uncertainty and avoidance. We'll continue our discussion in a moment. First, a brief word from Georgia Peach Income Tax.
Financial success creates opportunity, but it also creates complexity. Tax decisions affect more than forms. They affect your cash flow, your business, your peace of mind, and your long term financial future. That's why the Sweet Spot Tax podcast is powered by Georgia Peach Income Tax, strategic tax advisory, and IRS representation built for clarity. Whether you're planning ahead, facing an IRS notice, dealing with back taxes, organizing your business, or seeking a clearer path forward, Georgia Peach Income Tax helps you move from stress to strategy and from uncertainty to clarity. Visit www.georgiapeachtax.com to access tax calculators, educational resources, IRS tools, AI assisted insights, and practical guidance designed to help you make smarter financial decisions before money moves. If you're looking for strategic tax advisory, IRS representation, or personalized support, call 229 395 3625. And if you'd like ongoing education, tax insights, live discussions, and access to everything from free resources to premium and VIP tax strategy experiences, join the Sweet Spot Tax community on School. Because the goal isn't simply filing a tax return, the goal is making better financial decisions with confidence. Visit www.georgiapeachtax.com, call 229 395 3625, or join the Sweet Spot Tax community on School today. Georgia Peach Income Tax, protection, strategy, financial clarity.
Most people think tax planning is about paying less tax. That's not actually the primary benefit. The real benefit is decision making. That's the sweet spot shift. Tax planning is not primarily a tax exercise, it's a financial intelligence exercise. Most people believe taxes happen after decisions. In reality, taxes should influence decisions before they're made. That's a completely different framework. When viewed through this lens, tax planning becomes less about compliance and more about design. Successful people don't become wealthy simply because they earn more. They become wealthy because they structure success more effectively. The highest earners aren't always the highest accumulators of wealth. The most strategic people often are. The question isn't, how much did I make? The question is, how much of what I made did I keep, protect, and position wisely? That's where strategy creates results. If today's discussion resonates with you, here are 5 practical actions you can take immediately. Number 1, review your withholding. Use the IRS withholding estimator and verify that your current withholding reflects your actual income situation. Number 2, schedule a mid year or quarterly review and monthly reviews if needed. Don't wait until filing season. Create a habit of evaluating taxes during the year while meaningful adjustments remain available. Number 3, maximize available tax advantaged accounts, retirement plans, HSAs, FSAs, backdoor Roths, and mega backdoor Roths. Check into the immediate benefits of donor advised fund accounts. Those tools reduce taxable income while strengthening long term financial health. Number 4, protect your year round income. Most surprises occur because people never estimate where they are headed. What gets measured gets managed. Number 5, create a tax calendar. Quarterly planning beats annual panic. Small adjustments made throughout the year often produce significant financial results. Remember, tax planning isn't an event, it's a process. We've spent today's episode discussing tax planning, but perhaps the bigger lesson isn't about taxes at all. Perhaps it's about the difference between reacting and designing. Most people live reactively. They react to tax bills, react to financial stress, react to market changes, react to problems. Strategic people operate differently. They design outcomes. They create systems. They make decisions before circumstances force decisions upon them. And that's an important distinction. Because taxes aren't merely one reflection of a broader truth. The quality of your results is often determined long before the results become visible. April simply reveals what happened during the previous year, just as financial statements reveal prior decisions, just as health outcomes reveal prior habits, just as business results reveal prior strategy. The real question isn't whether taxes will affect your future. They will. The deeper question is whether you'll approach that future reactively or intentionally. Because the people who consistently create better outcomes aren't necessarily smarter. They're often simply planning earlier. And perhaps that's the hidden tax cost of success. Success creates complexity, but complexity without strategy creates friction. Think about that. And ask yourself, what decisions am I making today that my future self will either thank me for or wish I had handled differently? That's today's clarity check. Thank you for listening to the Sweet Spot Tax Podcast. For more tools, resources, and strategic insights, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229 395 3625. Again, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229 395 3625. Whether you're looking for tax strategy, IRS representation, or greater financial clarity, we're here to help. Georgia Peach Income Tax, Protection, Strategy, Financial Clarity. Until next time, align with your sweet spot and move with clarity.